Joining us today on Wall Street Silver is Peter Krauth, a former portfolio advisor and a 20-year veteran of the resource market. Thank you for joining us today, Peter.
Hi, Ivan. It's my pleasure.
So Palantir just bought $51 million worth of gold. Do you see more companies following their lead, and where do you see this going, Peter?
So yes, I certainly do see more companies following their lead. In fact, I mentioned that I had written an article I posted to Seeking Alpha back in February, which referred to what kind of was, in the news at the time. We saw that Tesla and MicroStrategy were plowing a lot of cash into Bitcoin. And interestingly for me, Tesla had modified their investment policy, saying that they were allowing themselves going forward to start buying gold and gold ETF type assets. And I basically put forward the argument that I could see how in the next few years, because of inflation, if companies did not manage their cash assets properly and perhaps look for some proper diversification, ultimately they could get sued by shareholders because they weren't looking out for, for protection of such large cash amounts. At the time, this was back in February, I went and checked and added up just the cash of the FANG stocks, these 5 stocks, and that added up to over $500 billion in cash. And so, these days everything's expensive. I don't think too many people would argue with that. And so I could see where they're in a quandary. It's difficult for them to find something useful or practical to put this cash into. And that's probably one of the reasons we see a lot of stock buybacks and some acquisitions, but they're quite limited. I could see it's quite the dilemma.
Well, most of these companies that are sitting on, we're talking Apple and these companies that have hundreds, Microsoft, Facebook, they're sitting on hundreds of billions of dollars in cash collectively. How do they normally invest that money? I mean, they don't buy 30-year bonds. They normally buy commercial paper that's probably 1% at best type of returns.
Right. And that's
negative. And that's negative right now, right?
Yeah,
negative
absolutely.
Real. Yeah,
absolutely. If you're looking net of inflation, which is ridiculous, even saying 5% is being conservative and unfair to reality. So yeah, at 1%, they're still losing money. They're still, let's say it's 5. Let's go with 5. They're losing 4% a year on their cash.
Yeah.
That doesn't sound very like a very sound.
I'm wondering if now that Palantir has done it, and that's a major company. It's a Peter Thiel company, a multi-billionaire who founded PayPal and several other big companies. If Peter Thiel and Palantir are investing in gold now with their corporate reserves, I'm wondering if that sort of gives a green light to a lot of other companies to, move 5% of their corporate reserves into hard assets like that.
That's a good point, because there's got to be a first one, and Palantir, for all intents and purposes, is the first one. And this is a multi-billion-dollar company. It's pretty high profile. $50 million for them is probably not that big, but it's still a substantial amount. Mm-hmm. And to come out for a tech company of all companies, say that they've bought $50 million in physical gold is quite the will have likely quite the impact. And you can bet a lot of people responsible for the treasury at public companies and non-public companies are noticing and deciding, should I be going down that path as well?
Well, I think something else to keep in mind here is that they did not purchase GLD or some ETF. They purchased, they purchased bullion bars, 50. It wasn't, and the articles made a big point about that also. This wasn't. Correct me if I'm wrong, but isn't that accurate?
Yeah, absolutely. So they made a point of buying physical gold. It's in storage. From what I understood, it's somewhere in the northeastern US. They're not saying where. I wouldn't either. And yeah, it's the real stuff. Absolutely. You know,
It's quite the statement. Quite the
it
statement.
certainly is. It certainly is. A guy called Shane McGuire, who runs the Gold Fund for the Texas Teachers Pension, you know, wrote a book, I believe it was back in 2010, after starting the fund the year earlier, and said he saw gold going to $10,000, and this is over a decade ago. And he said basically, and that's, I believe I have it in that same article, how, you know, it was someone else that he was referring to, but I think a fund manager of some sort, who said, you know, the prudent man years before would have said, you know, you don't buy gold to protect or to look for a hedge and for safety. And today it would be the opposite. You do buy it, in fact, and I believe Palantir's move is a testament to that fact.
Well, let's
Peter,
talk.
you know, back when you wrote that article, I think that was around the time Michael Saylor did his, you know, micro strategies. He did that big corporate conference trying to get more corporations to buy Bitcoin. Do you think Bitcoin's lost its shine to the corporate entities that were thinking of buying it, and maybe they're shifting to precious metals, or they're going to?
Well, I mean, lost its luster, I don't know. I mean, what I would say is that, you know, the regulation that's been coming and that's been called for, as much as perhaps some people on the you know, the biggest defenders of Bitcoin and crypto, you know, maybe against that, there is a positive side, and that is that it opens the doors to institutional investors. And maybe they've you know, they've gotten cold feet a little bit, having seen it drop from 62 to 29. And I could certainly see that as well. But, you know, it took very little time for it to jump back and make up half of that loss.
So Peter, why is silver down so much? That's, you know, you're known as an expert in the silver markets. You analyze this stuff inside and out. We had this great big run up after the virus issues back in July of last year, and everyone's getting excited at 30. But we've just been in this channel up and down ever since, you know.
Right.
You think this holds, or?
Yeah, I do.
And why?
Because it's already so cheap. It's so incredibly cheap. I mean, you know, anyone who's followed silver long enough will look at that chart and say, silver went from $12 to $30, right? So that's, you know, if my quick math serves me right, that's 250% from the bottom. That's 150% gain. You know, it takes time to digest that kind of gain. And I think that it's been acting, you know, obviously it's not fun. It gets annoying, it gets boring, it gets tiring. And anyone who's bought at, you know, 28 or 29 or 30, many of those people have thrown in the towel at $23. And they've done us a favor, right? So I say be patient and look to accumulate on these lows.
So, you know, with the price of silver being down, I mean, I know you follow the miners really closely. What's your take on mining companies? I mean, do you think they're leaning mean enough to really kind of absorb this price depression that we've gone through the past couple months?
Yeah, absolutely. I mean, you know, we spent say 2013, 2014, all the way to 2018, 2019, for the most part, you know, just suffering through this horrendous bear cycle. And they have gotten a lot leaner. You know, there's stats put out by guys like Crescat Capital that show how gold and silver miners are the most debt-free, the most cash flow positive they've been in at least 20 years, maybe in history, or at least, you know, what we've recorded, you know, in the last several decades. They're throwing off a lot of cash, and yeah, they can easily last through this for a while. Some silver miners are choosing to sit on some of their silver production, not sell it all, simply because they feel that the price is too low. So if they don't need to sell it, they're sitting on it and waiting for higher prices to cash in later.
Now, Peter, last time you had a price prediction when you were on Wall Street Silver of $300. What's your price prediction now, and why?
So yeah, you know, I think silver can go, okay, let's go crazy right away. $1,900.
Oh my God.
I know.
We're kicking you off.
Gold's, right. Gold's not even at 1900, but, and I'm not, you know, I'm kind of joking around a little bit. It's being a little bit hysterical, but Silver has a lot higher to go. And I wrote about this recently in my newsletter. I said, silver is the cheapest asset out there that you can really find right now. Certainly the cheapest metal by multiple measures.
Mhm.
And okay, so let's go through them. First of all, it's 50%, it's more than 50% below its all-time nominal high. Can't say that for gold. You can't say that for platinum. It's 7 times below its 1980 inflation adjusted high.
Wow.
If you look at $1, starting with $1 worth of gold versus $1 worth of silver in 1970, gold is up 50 times from that point. This is at least until I think 2020, the end of 2020. And silver is up only 16 times from early 1970. If you look at, and this is how I kind of get to this $1,900 number, but if you look at silver versus the S&P ratio when silver peaked in 1980, so that gave you a 0.445 ratio. Today, if you look at the silver price versus the S&P, you're looking at a 0.007. So if you were to compare today's silver price versus the S&P to the 1980 price versus the S&P, then silver would have to be up 63 times from its current level. And that's how you'd get to the $1,900 silver.
What type of fundamental environment could actually justify that type of price? And there's only 2 things that come to mind for me. Currency collapse type of confidence issues, or
War?
Or we're talking 6 to 10 years in the future when the supply curve is dropping dramatically for all the miners, and at the same time the demand side keeps going up from green technologies,
Right.
where there's just a supply imbalance of corporations are consuming more than 100% of what the mines are producing. So basically the mints are no longer producing coins. In that type of scenario, I could envision an insane silver, let's call it, I hate to use the word squeeze, but let's call it a silver going vertical, simply because there's not enough of it. Whereas with gold, we're never running out of gold. Even if the mines stop producing, all that gold is still sitting there in either the form of jewelry or investment bars or investment coins. With silver, there is the possibility of running out of it due to industrial consumption, and we just throw it away in landfills, right? Is that so? It's either monetary debasement or supply crunch.
Right.
That's how silver gets to a competitive price with gold.
Exactly. Or both. I mean,
yeah, we could have both. Yeah, exactly.
Right. Absolutely. And I mean, you mentioned it yourself. It's an industrial metal as well as a monetary metal. Half of silver is used in industry, and really I don't know the stats, but very little of that is recuperated, in recycling, maybe 10, 15%, rough guess. So, you're not getting a lot of that silver that's produced every year, 1 billion ounces. A lot of that doesn't come back. That's just, in landfill somewhere. So, I mean, we're going to have to keep finding a lot more silver. And
it's questionable whether there's the mines that are coming online, or you study this, they're smaller and higher cost, lower ore grades.
Exactly.
Compared to the mines we've been mining the past 50 years that are mostly mined out now. The big easy silver is gone, right?
Exactly. And so much of silver is a byproduct. I think we've talked about that as well. I think it's something like 70% of silver is only pulled out of the ground because we're mining copper, gold, lead, and zinc. So primary silver mines represent maybe 27% or so of the silver that we produce every year. So it actually depends on what is happening with those other metals.
Peter, do you have a time frame for all this? I know by your other videos you were calling for $30 silver by end of the year, maybe $35 silver.
Right.
And in our previous discussion with you, you called for a $300 price target on silver. What are your time frames for these?
So, I mean, later this year, I still think we can be above 30 that to me is still realistic. It doesn't take long. We saw what happened last year. It doesn't take long for silver to move.
It could happen in a month if
Exactly.
when it goes, it
Yeah.
goes. Yeah.
Exactly. And I mean, $300 silver, I think, is still my call for sort of an ultimate peak in silver. What kind of timeline? Anywhere from maybe 5 to 8 years, I think is still realistic for that. A lot of things have to happen. But the way things are going, it looks like it's heading that way. Absolutely.
But I when I have these discussions and I get into these debates online with people, and they say, oh, it only costs $15 to $20 to mine silver. If prices went up to 30, they just mine a bunch more because it only costs 15 to 20. And I guess what people aren't understanding is, yes, that's what it costs to mine it right now per ounce, but there's not more mines that we can turn on. So, I mean, is it possible for the price of a commodity to get so far ahead of its actual cost of production? I mean, normally they stay within some sort of reasonable percentage of the cost of actually producing an ounce of silver, correct?
Yes, sure. I mean, if the price goes up enough, absolutely everybody will want to try and produce more silver. But exactly like you said, it's not software. You don't just produce more copies, right?
Yeah.
So this is finding more if necessary. It means getting things permitted. It means raising money to do expansions on existing mines. I mean, there is all sorts of delay.
Years and years on each of those steps.
Absolutely. The
Probably cost millions too.
Multiple years. There's no question. And silver can move like crazy before supply is able to keep up with any kind of substantial price rise.
So Peter, you were telling us off camera how undervalued silver is as a commodity nowadays. What makes you say that?
Absolutely. So I've got a few charts here. The first one is the price of silver going back to the 70s. And so we can very clearly see here how it peaked at 50 in 1980, peaked at nearly 50 again in 2011. And still today so this is like, 40 years, silver is still at less than half of that peak, nominal peak. Ridiculous, right? So you look at other commodities, even across the board, the metals, gold is way higher than its previous high. All the base metals are also much higher. So just on that basis, silver has a lot higher to go. So here we've got the inflation adjusted silver price. So I believe even that with this, that it doesn't even actually do justice to the ultimate peak, because I think these are monthly prices. So it probably should be closer to about 150 or 160 back in 1980. So inflation adjusted. So if we go on that basis, so silver is something like, I think it's 6 or 7 times below the inflation adjusted 1980 high.
And this is using the official CPI numbers, right?
Exactly. Good point.
So it's even more severe than that.
Exactly. And that's how I get to my apparently crazy $300 price, right? So yeah, I mean, just with a 2 to 3% annually going back to 1980, still silver should still be 6 or 7 times what it currently is.
We had an interview with Dave Kranzler a while back that was very popular, and he said, these price targets are all kind of ridiculous, because he doesn't think when all this is over, he doesn't think we're even going to be measuring silver and gold in dollar terms anymore.
Yeah.
It'll be some other currency. So.
Yeah, I mean, you have to give credibility to the ability to think outside the box. There are so many things. All we need to do is look back at the last couple of decades. Who would have thought so many of the things that have taken place would have happened? I mean, right? Look at pandemic. Look at the loss of Lehman. Look at the size of bailouts. Look at the size of the Fed's balance sheet. It goes on and on like that. I remember talking to a banker. This must have been back in probably 2004, 2005. and talking about about gold going to $2,000. And he was saying, oh, well, you know what? You don't want to live in a world where gold's at $2,000. And I said, well, you know what? You're probably right. It probably won't be the nicest environment. Well, here we are. It hit $2,000 last year. It wasn't a very nice environment, but I'd rather have the gold than not have it at $2,000, have the hedge, be protected. And, because we're going to be there anyways, right? Might as well have the protection. So it's not because you're wishing it away that it's not going to happen, right? Be prepared.
Well, no matter what happens, there are going to be some areas of the country and the world that are still a nice place to live. And my goal is to have enough buying power where I can live there. When we get there.
I agree. That's what this sector can do for people who have sufficient exposure. That's I believe going to be the outcome for a lot of people. It has been in the past. I believe it will be again.
So what are we looking at here? What's this chart?
So here we've got an interesting chart by Bullion. I believe it's Millennium Bullion Group.
That is Nick Barashev's group,
Exactly.
right?
Exactly.
We have an interview coming up with him.
Fantastic. So they do some great work, and I can go into a little side note story about that after. But anyways, 1970, if you look at $1 invested in gold and silver and platinum as well, to the end of 2020. So $1 in gold is up 50 times, $1 in silver is only up 16 times, and $1 in platinum is up 8 times. So on that basis, silver has a lot higher to go versus gold. So that's interesting as well. And that, of course, corresponds back to the first 2 charts.
You start seeing charts like this and you think through it logically, and then Keith Neumeyer's estimate of triple digit silver just doesn't seem so ridiculous, does it? It's just all a question of, what are the circumstances that get us there? Is it an inflationary model or with currency debasement, or is it a supply crunch model right now, I don't know. What do you think is going to, let's start wrapping this up, but what do you think is going to be the trigger? Is it that gets silver to start turning around? Would it be like a 10% CPI print one of these months where people?
I don't think they'll ever let that one out, Jim.
Well, I mean, they're going to have
Right.
to. The last one was what, 5.9%, and they only managed to pull that off by massively playing with the rent housing number, by artificially putting that way down. Like, I don't know how hedonistically they're playing with those numbers with the rent moratorium and not counting what people are. Maybe they say, well, people aren't actually paying the rent, so it's not inflationary yet. All right, okay, I get that. I mean, who knows? I didn't see that footnote in the CPI, how they're actually I don't know, Peter, you look at that stuff closer than I do, but I'd love to know their logic for how they're coming to those numbers. But one of these months, they're not going to be able to hide that anymore, because they have not removed housing and rent from the CPI metrics. And if they keep showing these tiny increases that bear no relation to everyone knows rents are going up. Everyone knows housing costs are going up.
Right.
And if CPI keeps showing numbers that don't reflect that, I mean,
no, you're right.
CPI already has a credibility problem. I don't know how much worse they're willing to allow it to get.
Well, unless we turn into Venezuela, let's not hope, but where it's illegal to print real or even anything close to real inflation numbers, then hopefully we will see something realistic. But to go back to your earlier point, how do we get to such high levels in silver? I think that the supply side is what will get it to climb in a more sort of gradual way.
Yeah.
And then some sort of a hyperbolic blow off top is what is going to come from some sort of currency crisis. I think we'll get it.
Black swan event.
Exactly.
Or someone on Reddit said, no, we're not going to call it black swan anymore. We're going to call it pink flamingo now.
Yeah, I seen that.
All right. Well, thank you very much, Peter. We really appreciate you sharing this time with us and giving us your perspective. We'd love to talk to you again in a few months as the year develops.
Thank you so much. Always a pleasure. And if anybody's interested, they can check out my newsletter, silverstockinvestor.com. And appreciate,
The link will be in the description.
wonderful. Thank you so much.
Everyone watching, subscribe now.
You're
There we
supposed
go.
to say please.
No, please, please.